to come in and take their seats.
There's 5 of those. How many banners do you have? 1, 2, 3, 4, 5, right?
Or just 3.
Terms? Cool. I guess you were not with TDeFi.
Okay. So hope everybody had a nice lunch. Let me just take 2 seconds. I unfortunately had a logistics issue this morning. My name is Eric Brundage. I am the CEO of Sandspring Partners, and we help family offices with strategy, tax strategies, et cetera, but of course end up helping them also find interesting things to invest in, which is how I end up here today. I am also the owner of a digital newspaper in Monaco called Monaco Life, and it has become the biggest newspaper in Monaco. We cover all things to do with anything PE, tech, sustainability, et cetera. So obviously it's very important for me to understand for my family clients what these folks have to say so I can translate that information. What we have for you now is a panel rounding up 2020, the new composition and landscape of the crypto market. And here to chair this panel is Ralf Kubli. Ralf runs CVVC, and they are seed investors and organizers of the blockchain ecosystem in Switzerland. Ralf?
Thank you. Thank you, everyone. Pleasure being here. To start the panel, I'd like to maybe quickly have the panelists introduce themselves and focus on how long you've been in the space and what you're currently doing. Maybe Joel?
Yeah, I believe my entry point to the space was on day one when the Ethereum white paper was launched. I helped launch the first smart contracts educational channel and the crypto economics research group, as well as founding MetaMask DevCon 0.
Okay,
And since then, I've done a lot of academic work, both with institutional players like the sort of largest investment banks in the world, and currently have positions at both Notre Dame University and MIT as an industry advisor.
Thank you. Hubertus?
Yeah, thank you, Ralf. Thank you, ladies and gentlemen. Nice to be here. I'm Hubertus Thonhauser. I've been in the VC space for the last 10 years, investing mainly in fintech, marketplaces, SaaS models, and recently also in blockchain. So we invested also in a couple of projects like Tezos, RSK, Polkadot, and I'm also the chair of the Tezos Foundation Council.
Thank you. Gaurav, thanks.
Hello, ladies and gentlemen. Again, I'm Gaurav Dubey. I run a family office holding company from Dubai for the last 5 years by OverNext. I've been investing in crypto almost like since ever, starting from Augur, Golem, and so on. I recently invested in a company called TradeDog, and they started off with a DeFi accelerator 8 months ago, and somehow I found my love there, now heading the show there. So we are helping DeFi and NFT startups to come off ground. We help them with almost everything they might need apart from the project. And yeah, that's what we do.
Thank you. Christophe?
Yeah, hi everyone. I'm the co-founder and CEO of Olymp Capital. It's a blockchain crypto fund based in Luxembourg, the first of its kind in Luxembourg to have been registered back then. And so yeah, we are focused on blockchain technology and cryptos all over the world. And personally, I'm involved in some specific project, but for time to time.
Thank you. So we have quite a bit of time, so we will structure the talk a bit. We will start with maybe the big picture, and then we have a number of obviously investors, both in the tokenized environments, but also on the company building side. So it will be interesting to explore these aspects a little bit. But so to start, I have a question for Joel, who has thought about the space quite a bit, is advising companies, and also you've had a unique vantage point because you were very early with a few key projects. And So when you look at maybe a longer period and in the development of assets, not just digital assets, but overall assets, banking, financial, capital markets, what strikes you? What happened in 2020, and how does this compare to what you have thought of the space, or how you have looked at the space in the past?
From looking at kind of historical route, there's many different things that people thought would happen at some point, and many of the application areas have started to get very serious in 2020. I think that many of the things that we knew could exist in DeFi, 5 years ago, potentially even more than 5 years ago, have now started to become realities. And that includes both the tokenization and ownership of sort of assets that are outside of the blockchain space. So real, hard assets, which is something I've been involved in many iterations, and sort of new forms of blockchain governance that exist entirely bound in a kind of blockchain world, and then allow global liquidity around new types of lending mechanisms. So just the growth in those markets has been incredible. The sophistication of the people involved has been very, very impressive, and the way in which the space has internally evolved. And from a historical perspective, it was very interesting watching the transition from Bitcoin to Ethereum. There were 5,000 participants in the original Ethereum sale, and the sophistication of the people was just remarkably high, from the people who kind of understood both what Bitcoin was capable of and then how it could be improved upon, the various research areas, ways in which people were doing that. And if you are plotting the research end of things, which is something I'm very involved with, you see that it's not a binary process. It's a number of different areas of research, some of which cumulatively take several years to solve problems. But then effectively, these solutions are able to be combined into both layer 2 technologies, which are now getting going in a very serious way in Ethereum, and then the many other sort of competing chains that are out there looking to kind of take a stamp at different types of digital assets.
Thanks. So, a decisive development in 2020, many things happened. Hubertus, you are, as you mentioned, you invested early, so as an individual and also as a VC, but now you can maybe talk about the perspective that you have on the space as an investor. At the same time, you are involved in the Tezos Foundation, which is probably one of the largest institutional holders of crypto assets. So, what did this year mean to you, and how do you think about valuations and risks going forward in this space?
Yeah, I think overall we have to acknowledge that we are still very early stage and very early on in the blockchain game. So I would compare it to probably the internet of the 1990s, both from a technology and an adoption point of view. I wouldn't be too enthusiastic about every little upward scale on the market that's happening now, because we're going to see a lot of corrections. But I think what is absolutely evident is that you get more adoption on different layers. So obviously you have the investor side, which is obviously the mainstream, becoming mainstream of the kind of leading asset in the digital space, which is Bitcoin. I mean, we all followed the stories yesterday. This was just the last consequence of something that has been built up over the last 12, 18 months or even longer. So we see more in institutional adoption and interest in digital assets in general. As an investment case, right? This has nothing to do with the technology. I mean, Bitcoin as a technology is probably not the most scalable one either, but at this stage yet. But it's become very interesting as a store of value and as an asset, also because of this whole macroeconomic evolutions that we have all witnessed over the last couple of months. But on the technology side, I think a lot of groundwork has been done that is probably not even realized by the mass crowd and by the mass investors, especially on the layer 1 stage. I think projects are becoming more scalable, are becoming more efficient. On top of that, obviously, we see adoptions of blockchain, but still this is a very closed loop. So Ethereum is a great example. I mean, DeFi is something fantastic, but it's still a very inner circle of Ethereum backholders who participate in that. And I think what's going to be interesting is if the gas fee issues with Ethereum can be solved, for instance, by wrapped assets on other chains that are much more gas efficient and cheaper and faster. So I think we're going to see that in the future. And that also is a good thing because it creates even more crowd to the space. And then a third element, I think, remaining with the DeFi space, which was the hot topic last year and still is, by the way, I think the regulation will also step in at some point, which I'm not scared of at all. I think it's a good thing that even in DeFi projects, you need to respect minimum standards in AML, KYC, because that creates an even bigger on-ramp for larger players to be participating in that space, which is very exciting. So from the Tezos Foundation asset management perspective, obviously it's a great year because we're holding 50% of our funds in Bitcoin. But again, it's so early stage. So I mean, for us, we have a perspective of 10 years. It's not something short term. And we need to be diligent to manage the assets in a way that it's, the foundation can execute along with the technological environment development, which goes hand in hand with the adoption of the community of developers, and the technological evolution is not something you can completely ignore. So it's a hand-in-hand process.
Thanks, Hubertus. Christophe, staying for the minute on the investment perspective, you have taken the time and the effort, to get regulated. In your jurisdiction, you're providing on-ramp for mostly private investors to get exposure in the space. In preparation here, you mentioned that you really think qualitatively the crisis has changed the perspective of individuals and investors on the assets. Maybe you can elaborate on that, and what is your perspective in terms of like what has really happened in 2020?
Well, what happened is that I couldn't travel anymore, so that was a big problem. And I think jokes besides, I think it was really a problem for all the space. So we are registered, not regulated. And this is important because I don't think there is a blockchain fund regulated in Luxembourg, and they're not that crypto friendly. But yes, it was difficult, a long journey to launch this fund over there. What we notice is that the behavior are changing. Is not just now we investing in some kind of assets with professionals, and I think 2 years ago, it was like I was in a crypto, sorry, story time. I was in a crypto dinner in New York, and you just had professionals, and they were just selling assets to each other. And I told them, look, you are too smart for us, and it's just the same money moving around. And I think this is changing right now, and I think the pandemic helped. Not necessarily in a good way, not all the time, but I think that now there is some trust issue in a lot of domain. And I think that there is a lot of things that the blockchain can solve, and gaining maybe more trust in some area. And I'm thinking about finance. So you want me to push further on this, like we were speaking before? So yeah, like I mentioned earlier, is that I think use doesn't, I mean, there is a lack of confidence in the financial ecosystem and also from governments, which is understandable because I'm going to talk just about Europe and especially France where I'm living. It looks like money is not an issue anymore. You are not unemployed, it's fine, the government is going to pay for it. Your store is closed, it's fine, we're going to give you 20% of what you were making last year on the same month, etc., etc. And we are doing this for last year. And so now economic is not, I mean, it's not an issue anymore. We find money like this. Regular people doesn't understand why. And I think at some point it will have to stop. But now I can understand why more and more young people, the young generation is going to say, okay, what is this financial system? And so before that, it was just specific individual investing in Bitcoin because they heard or they were a little geek. And now we're thinking something different. Their grandparents invested in gold, I think. Well, this is the same story all over again, and I'm not the first one to saying this, and now they're investing in Bitcoin, but not just. They will invest also in asset classes, crypto asset classes that matter for them. It can be NFTs, it can be any kind of thing that is sustainable now, which wasn't the case before. So it opens a lot of possibilities. What I noticed also in the private sector is that there is some major companies who's going to ban because this is not in their charts, right? I read an article about, Pornhub, right? And so Visa and MasterCard said, we don't want to be involved in this website. Well, it's an industry. And I think that at some point they're going to create their own competitors. And they will create maybe a crypto and a new financial system.
Okay, Bertrand, so, investing. So Gaurav, you have been, you've participated in the space early on, really early on, right? Through mining, investing, angel investing. Now you're building companies. So when you look at the space today, and you mentioned one portfolio company, but what strikes you, what is really important when you look at entrepreneurs and teams that want to build now on top of this technology or with this technology, and what is relevant really in order for these companies to survive and to thrive, right? I mean, now money is here in abundance, but users are not there yet. So how do you think about that?
Well, I have to digress a little from blockchain in that case, because the thumb rule never changes. You're always looking for good teams. You're looking for thorough professionals. If not skilled, then at least by heart they are committed to a startup, the stuff that they're building. And that's what I look everywhere. And that's a lot of time I'm being asked, what's your niche in investments? Although I love fintech, but my portfolio ranges from life sciences to medicine to electronics to robotics and blockchain. And the reason I'm able to do it successfully is because we invest in teams. And I think I've heard this statement twice today, just today itself, right? So the thumb rule still remains the same, whilst obviously few moving components of a project would always mean success or not, which in this case, I would again recall the statement in the opening of the day today that I made. So we have to stop thinking from the perspective of, we'll be able to blockchainize everything. We will not be able to push blockchain in almost everything. There are certain use cases that blockchain is able to solve just about perfectly. And there are something that deserve a better solution, let's put it like that. So finance somehow has been the killer app, if you would want to call it. And finance is something that where blockchain obviously emerged in our conscious, in our knowledge. It emerged through Bitcoin. So finance is something that I think will always be influenced and rather rediscovered through blockchain and its use cases. DeFi, although has proven itself pretty much, we are sitting at I guess, I'm not updated to the facts, but probably $30 billion or $40 billion of locked value inside it, and that's growing rapidly. And that's when you already mentioned we don't have adoption. We don't have adoption, right? And that's the kind of value we already have in there. Think about real world adoption apps not trying to rebuild themselves, like DeFi apps. Sorry about that. DeFi apps that are not planning to solve it all by themselves, but rather facilitating the institutional clients, right? They go on to banks, they go on to payment systems, they go on to probably social networks, probably, like he mentioned, some of the discrete industries that are not being served by institutions today, payment institutions. I think there's a whole market out there. They're crazy. They're looking eagerly to find a solution. And I still remember a call from one of my friends in the payment space, one of the largest high-risk payment processors of the world. And they were trying to buy an algorithm for transaction forensics built over blockchain. And I said, guys, you guys have the best technology in the world for risk processing, right? You're the godfather of risk processing. Why would you need another algorithm? And why would you need blockchain? And their answer was, dude, you should step in and find how hungry we are for solutions. And I think somebody who can consult us on blockchain will just do justice to all the risk industry. So I think, yeah, that's the way to adoption. And I think blockchain has a long way in DeFi.
Okay, thanks. Maybe just a brief statement. The fact, obviously, that finance was one of the first areas to really benefit or to adopt some of these technologies is because finance, by its nature, is digital, right? We are exchanging money, and it's purely digital, right? So I'm giving money to someone, and someone is giving me the money back in whatever form. And these are all numbers, so they are kind of prone to be packed into smart contracts or numerical descriptions and mathematical formulas. So Joel, maybe you've mentioned you're advising a number of funds investing. So when we maybe switch a bit to the risk, I mean, Hubertus said it's early. Whenever somebody says it's early, we hear very big numbers in the future. So, but still, there's real risks now at hand. So when clients come to you, when people ask for advice, how big do you think the risk is if I want to get exposure to this asset? When we're talking about the asset class, I want exposure to the asset class. How should I think about risk, with respect to the asset class?
Generally speaking, my advice for people who are entering in the market is to go in with a long position on the entire market. And for example, one of the reasons I wasn't able to be here for the morning is I was advising a fund, and I advised them to only take people, even though it's a liquid crypto fund, to take people who have a minimum of a year-long lock and maybe a quarterly redemption cycle. And part of the reason for that is I think if you're constantly checking, should I be in and out of this particular asset class, it's just maybe not the right thing for you to be in it, at least with a very significant portion of your portfolio. There is managed risk and high volatility over the short term, and I suspect that's going to continue to be the case. I know and advise as well a number of very good algo traders who've been my business partner on my educational business, which is sort of where we have a DeFi mastery course and trading mastery course, created the first ever Bitcoin hedge fund when Bitcoin was 10 cents. So he's seen a lot of market cycles, a lot of exchanges go completely under, the kind of things that hopefully the industry has outgrown, but you can't guarantee necessarily that you won't have some of these large scale either fraud or hacks again in the future. So it also is one of the reasons why I advise family offices and things to invest in a fund, and particularly a fund that has a manager who has weathered multiple sort of crypto winters, as they're called. Because if you haven't been through some of the down market cycles or seen things, you might be caught by surprise. And if you've seen what happened with the ICO mania, there's sort of multiple waves of these things, multiple, insecurities and certain, fundamentals when it comes to the platforms when they're early in a kind of launch period. And you want to be hedged against those things. And you don't want to put all of your money into something that hasn't been proven. At the same time, you want to give room for some of the venture type strategies, some of the new coins that are going to pop, some of the new things. So, if you're long on the whole space, I think you're in a great position. Personally, I'm extremely bullish about the whole space and how it's going to evolve. I think at this particular moment, as Hubertus mentioned, since we've hopefully all been following the news, there's a good chance that a number of these Silicon Valley companies are going to follow suit and putting a significant amount of their cash into, Bitcoin and potentially even other crypto assets. And, once that happens, I mean, it's just going to shift the whole market kind of massively into Bitcoin really being a reserve currency, which is really its original intent. So I don't think we can look backward, but at the same time, we need to have some sense of the lessons of history of how to hedge against some of the things that have happened in this industry in the past.
Thanks, Joel, for the perspective. So, Hubertus, you said, yeah, we shouldn't be too enthusiastic, and there's still a long way. You have again a unique position because, as in the Tezos Foundation, your aim is to build a lot of these, or enable a lot of this infrastructure, so we don't have, catastrophic events. So, what's your perspective on how quickly will we get there to really have a mature environment, so that very, very large institutional investors can sleep well at night?
Well, I think the beauty and at the same time, the biggest, I wouldn't call it problem, but the biggest issue of these industries that you have, contrary to any other business that is being built, normally you would focus on the tech very quietly, you build the infrastructure, you build the foundations, and then you build on top of that. Once everything works, you build a proper UX, and then you launch it. This is normally how you create a tech product, right? In this space, because of the open source character, you have obviously the crowd involved from day one. And it's linked to these tokens that are traded on unregulated markets or largely unregulated markets. And that creates these hype cycles, and that often creates a dilution about what's really there, and between there is a huge gap and a huge disconnect between valuations and what the projects or the products really can deliver out there on the market. And I mean, in case of Bitcoin, obviously that's different, because as we said before, this became widely agreed as a store of value now for all these characteristics and token economics and etc. But I would argue that all these so-called altcoins, if they were not basically public and open source with all these crowd so-called investors, I rather call them gamblers, then it would be a total different market and a total different situation. So I think I agree with what you said before. I think every serious investor who wants to get into this space and who is not into the sentiment-driven short-term hype should take long positions, but he should do his research really on which project to invest in, because as we say, there is a lot of foam and a lot of hype created by individuals around that. I think the most important aspect is, what are the characteristics for technology to be out there in the long term and not just for the next 3-4 years? And I think there are a couple of elements which are very important here. So a technology should have the ability to upgrade itself in a way that it doesn't require hard forks, for instance. I mean, we have seen a lot of hard forks in the past. It was an issue to a certain extent. There should be a sort of predictability for the users of such a technology. This can be financial industries, but also any other institution that wants to build on top of blockchain. You want to build on a technology that has the potential from the technology perspective and from its features to be there in the long run and not to be outdated at some point and replaced by something else, because that's the worst thing you can do. So I think I'm missing a little bit in the investors or in the crypto market space, this diligence about the fundamentals of the various projects. It's very hit driven, it's very sentiment driven, it's about creating some stories, creating some hype, but it's not really about substance. And I think when we really want to have institutional investors to enter not only the Bitcoin space, but also the altcoin let's call it a non-Bitcoin related crypto industry, then we need to have some transparent metrics that I would compare it to some sort of Bloomberg terminal for crypto that provides tangible, transparent information about the state of these projects, and that gives more information to the to the crowd investors to participate in these projects. And I think that's a good thing. There are projects building these kind of applications now, which I think will lead to a lot of transparency.
Thanks. So, Christophe, so you're having easy conversations with your investors, long only. That's your answer to any of their concerns, or
what was that?
Long only. When you have your, as Joel said, you should be long in the space. So all your investors are long only, and they're happy, or
well, in our case, it's long because for one reason as well is that when we launched the fund, because of our investors, some of them wasn't that exotic. We invest a lot in equity, so for sure it's going to be long term, and a little bit in crypto. And this is actually the reason why we're going to launch another vehicle in another jurisdiction because we want to be short on the investment and on the sale. But yeah, I do agree. I do agree. I mean, if we understand the technology behind and the underlying of the token, and if the project keep his promises, I think, yeah, we should hold. We should hold and keep going. Well, what people see is the volatility around Bitcoin and Ether, most of it, right? But there is a lot of project. Unfortunately, sometimes is very correlated with those major coins. But yeah, it will grow. It will grow, and people start to understand, which wasn't the case a few months ago. We realize also that investing in blockchain equity doesn't make any sense as a specific fund for blockchain and crypto, because now most of the funds in tech, they do understand blockchain, the technology, I mean, which they didn't understand a couple of years ago when we launched. So we were kind of, all right, the professionals in our area. Now it's more about really crypto, and this is something else again.
Well, thanks. Gaurav, looking ahead a bit, in 2021, what do you think is relevant, also for some of the portfolio companies or projects that you support? I mean, in this decentralized thinking, what do you think are some of the use cases? Because you mentioned, I would like to have the people that I work with and invest in, stay in the reality and not build for, a future that may never arrive. So what do you think are some of the dominant themes in the next 12 to 18 months?
Again, I would want to apologize in advance if I heard a few sentiments, but I think we have tried to bank the unbanked for a long period of time. Let's focus on the existing industry of the banked, the served. I think they are the first ones to adopt, and I think with the long history that we have with Bitcoin and Ethereum as a technology, Bitcoin as an asset, it proves that we would need adopters first and then major problem solving. Obviously, it goes hand in hand, but I think, so yes, my core focus, and I think I'm looking forward to more, to solutions that are more adoptable in ways, probably B2B. I think there's a way to enter into the large markets. That's one. And with this, I think blockchain has also found heaven in supply chains as one of the most adopted enterprise solutions. So supply chain solutions do stand a chance. They are doing well. Just the fact that not a lot of public chains are being adopted there. I think, and I really liked a couple of presentations this morning that are trying to get in there. I think that's something to look for. I am not a fan of recent L1s. Obviously, there has been a whole era of layer one solutions, infrastructures, blockchain. We have had some phenomenal projects, Tezos sitting here, Ethereum. I don't want to name others, but yeah, there are, we all know the projects. So I don't think we should focus more on there, on L1, but more on the use cases and, the app side of it, or maybe something like what Polka is trying to do with all the parachain ecosystem and stuff. So that's my focus on more adoption side, adaptable, retail oriented, or probably retail problem solving solutions.
Thanks, Joel. Maybe you can comment some of the things that you see that will a dominant theme in the next 12 to 18 months.
I think just to piggyback off of what's just been said, there are, in a traditional tech startup, there's often an early adopter audience, and then, this moment of crossing the chasm to get sort of a more mainstream kind of adoption and people who are driven by the pure utility. And partially because the cryptocurrencies have been so successful in their own right, and the early enthusiasts are so proactive in building things on top of these open source frameworks. The actual adoption around, for example, taking, let's say, traditional art portfolios and tokenizing them and using them has often lagged the ability of people to create new digital NFT infrastructures and swap them and build portfolios and build, effective digital hedge funds based on portfolios of NFTs that then, can do some yield farming on the basis of that, and all these other things that kind of get baked into a flash loan that then allows you to borrow against it and, get some more other things. It gets kind of complicated. But effectively, those are all internally driven use cases by technologically savvy enthusiasts. And that's also where traditionally the yield has been highest in this space. That's where the sort of projects are really going from, 1,000% returns and things of that nature. So I think that's sort of if you're on the outside looking in and you want to capture that really high yield type of opportunity, you need to find the people who have their head to the grindstone. And, it's a fair bit of detailed, deep kind of technological due diligence to find out who the savvy people are, what is the next iteration that's going to drive the next, series of value and how it's going to be captured. But, it can be very, very rewarding to do that.
I think we can think of the DeFi space at least at the one place in financial markets where risk is priced, appropriately, right? So you could lose everything, but you can also make a lot of money. As opposed to legacy financial markets, apparently there's no more price for risk. Just everybody gets money at any rate almost, right? So, or you actually are being paid to take someone's money. So that's I think an interesting development. So we have a few minutes left, and we specifically were asked for predictions. So each of the panelists, we sit here a year from now at this great Agora conference with probably a lot more people, since hopefully we have COVID behind us. What has happened that we did not think of or cannot think of today? So we sit here today, 1 year from now, and what has happened that was completely unexpected? I mean, you don't have to answer the question. You can also just make your own prediction. But
Biggie's making public shillings. Elon Musk, Dogecoin. That was never expected.
I think a subject that is probably not getting enough attention in my view is that governments will start to apply blockchain technology as well with central bank digital currencies. And the opportunities that this would basically bring to the governments is a completely revamp of monetary policy. That when you think about it, that you can drop government money directly into the wallet of an end user. You can actually very focused and very earmarked monetary policy. It's not too general. So for instance, you can say, instead of just giving the money to the banks now to increase the M1 and creating all these bottlenecks, you could actually say, okay, it goes directly to the Horeca industry because they have been suffering the most. So I think this technology would allow that. I know that governments are thinking about this. And I believe this can be a very interesting game changer in terms of monetary policy in the future. Obviously, it's a political process. I'm not sure if we're going to talk about it in 12 months from now, but I think that's an evolution that's on the radar, and that's pretty exciting.
Thanks. Oh, go ahead, Joel.
Yeah, I mean, one of the most interesting things happened recently was this Wall Street bets, and there was a way to turn it off, turn off Robinhood, force them to get more leverage, et cetera. And I think in the next iteration of this, it won't be able to turn off. And similarly, sovereigns and other people will wake up and say, we need to really look at the systemic risk that's here within the currency system, central banking system, like really get serious about this. Because, yeah, I mean, effectively, students of financial history know when George Soros, for example, broke the peg that the Bank of England had. And that was kind of a momentous moment because people thought, oh, well, you can't. The central bank has the last final hand, and in that case, it wasn't the case. And I think here we're finding this sort of populist, sort of Reddit, 4chan kind of mentality combining with crypto, in some cases going to be far more than governments know how to deal with at the present. And similarly, and just to make another prediction, I mean, I think this NFT market, we haven't seen anything close to the top of that. I think it's going to truly explode.
Okay, so we have NFT. I'm going to put a lot of pressure on Christophe. So we have NFTs, we have CBDCs, We have yet another Dogecoin, whoever's going to be, replacing Musk. Christophe, what do you see? What's your prediction for 2021?
I don't know if it's a prediction, but on the same level than the stock market and Wall Street, there is censorship and freedom of speech as well. And I think it's just the beginning. So you have those major companies controlling everything, and you can have any conviction on your own, but at some point you just can't block a server because you don't like a website or you don't like what they are saying. And I think it's the same thing than on Wall Street. Same level of problem. And I'm pretty sure that at some point we'll see popping up some new, maybe social network, new solution for servers. And I think this is very important. This is something, here we're talking about unbanked, that we're trying to solve unbanked for decades. Well, no one wants to save this. No one wants people to have banked in Africa, for example. This is why we never sold it. Well, it's the same thing, I think, for freedom of speech. And this is the same country as well. There are experiences, censorship for decades now. And the technology will help on this. 1 year, it's a little short, I suppose. But
I think it's a little bit an irony, but I think the moment we won't have conferences like this and nobody will talk about blockchain as a technology anymore, but we will talk about the applications built on blockchain, this is the moment when we have true adoption and we will have the breakthrough. I mean, who is going to an internet conference nowadays? Doesn't exist. I mean, you talk about fintech, you talk about the applications built on top of it. And I think this has to evolve. So we shouldn't talk too much about the base layer technology because that's engineering stuff that is being done now. It's something that goes over time and that needs a lot of upgrades. But we should focus, the ecosystem does this anyway. They will focus more on stuff building on top of it. And I'm looking forward to a situation where there are no blockchain per se conferences anymore, but really conferences of use cases built on top of blockchain. I think that's much more exciting.
Yeah, on a similar note, I think, as we see this market grow, we won't necessarily, we'll see, Lady Gaga or the Lady Gaga of, the next half decade have her own conference, and it'll be a crypto conference where they're selling their own art, but it won't be branded as such. And you'll have, every TikTok and Instagram and influencer at it, spreading their things, and, no one will care or talk about the technology at all. And hopefully those of us who've had foresight to invest in those things early will be very happy regardless.
Very good. Well, I appreciate your time, and we thank the organizers for organizing the panel. I think, as I said, I speak probably for all panelists. It was also the first time for me to travel in a very long time, so it's great to be
finishing
back.
up here, guys.
And maybe the reason why we talk about blockchain still, Hubertus, is because it is still fundamentally changing how we do business, right? Until we figure out,
it's a little bit provocative.
Sure. Until we figure out how it really changes business, I guess we have to keep talking about the technology, right? So,
thank you, Ralf.
Thanks a lot.
thanks.
Thanks, Ralf.
Yeah, just finishing up here, guys. So that was interesting.
Thank you,
Let's just see the
panelists. Great
closing
job.
comments.
Since we ended it 2 minutes early, let me just add one thing. I mentioned I deal with family offices, and I will tell you the one thing that they talk about cryptocurrencies. First of all, the difference between blockchain and Bitcoin, most of the world doesn't understand the difference. You Google blockchain, you get articles on Bitcoin, but it's the volatility that the investors I talk to hate. And you talk about predictions. Dark news, fake news, call it whatever you want. As today we see Elon announces he's going to invest and buy, and what happens to the price? So from now on, how do you know it's Elon? It could be anybody distributing that news, which causes tremendous volatility in a quasi-unregulated market. I think that's one of the big problems in all financial services markets is going to be what news is real and what news isn't, and how it affects volatility.
I think we were already discussing this outside.
Yeah.
So Ralf hates some people who are, let's say, shilling some coins out in the open. And I think if obviously he's a seasoned investor and a guy in the space, has seen so many journeys. I think the production value, as named by Ray Dalio in his videos on economics, if you understand the production value, right? I was telling him, and this is not an investment advice, but I agree with him on the public shilling. And I do agree that that's not the real case, an application of Dogecoin, and hence I'm shorting it out in the market, right? So if you don't agree to the production value and the value that's there in the market, well, put your money where your heart is. Go out, short it, right? And with these actions, probably you'll be able to get to the right markets, the right sentiments, because this needs institutional advice. The space needs research, like people who understand trading, people who understand investments. And as long as like Hubertus said, just about everybody starts gambling into the space, they're here to lose money. Let them. I mean, how can you help them? They'll lose it either ways, right? It would be somebody who's pumping up and then dumping on them, or probably people like us who are shorting it on them, like above them, right? So I think this is the natural order that has to come.
Again, thank you guys, very much appreciate it. Christina, do we have Christina and her panel?